pays to work with a specialist financier when you're buying a business rather than just go with your regular bank. Hi, my name's Ali Cain. I'm a finance journalist and the host of the Buy That Business podcast. Each episode, we talk to experts about everything you need to know when it comes to buying and selling a business. Today, I'm joined by Nathan Coad, a finance broker with NMC Finance. Welcome to the podcast, Nathan.
Thanks very much, Ali.
So, Nathan, tell me a little bit about your background.
So I spent a good 13 years of my life with two of the major banks across the eastern seaboard of Australia, various roles, but predominantly as a commercial banker and consumer lending and departments. So very much in that credit provision side of things.
So how has finance for businesses changed over your career?
Massively. Obviously, there's been a lot of regulatory changes, especially over the last 13 years, and they've sort of ramped up over that time. We've had a number of inquiries through the financial advice areas and definitely in the credits advice areas, and the most recent being the Royal Commission, which is still having some flow through in terms of those changes that are going to be put into effect. So the consumer lending environment is mostly been affected. The business finance environment still has quite a lot of flexibility in terms of providing finance for the needs of business owners. But yeah, certainly a dramatic change in the environment over my career.
So if you're someone looking to buy a business, where should you start when it comes to getting the finance for it?
Well, having worked in both the banks and now as a broker, I'd certainly say that there is a lot of value in engaging a finance broker, and specifically a finance broker that has a good business finance background. And that's really important to differentiate those skill sets from a conventional mortgage broker. Home lending is very much its own sort of beast, and very simple black and white policy types, whereas business finance has many shades of grey, depending on industry type, size and scope, the understanding that the potential buyers have of the business and their financial position. But that's really, I think, the first step to engage a good finance broker, as opposed to going direct to potentially your home loan bank, who may not specialise in business finance or for that type of business. If you have a broker on your side that has business finance experience, they will be able to peruse the whole market for you, understand your position really precisely before they actually go ahead and work with a specific bank or a couple of banks or lenders.
So how important is it for the business to have really sound business plan and a sound financial plan in order to get finance for it?
Yeah, so this is definitely one area that bank credit assessors like to see for a few reasons. One, it gives them a clear picture of what the potential of the business is, and also it shows the acumen and credentials of the person that's actually purchasing the business. Have they thought about all the risks? Have they thought about what the cash flows are going to look like and the assumptions that those cash flows come with? And that really gives the credit assessor of the finance a good idea that this person has actually considered all the factors of this business and understands what they're getting themselves into. Secondly, off the back of good forecasting from that business plan, the financier will be able to see that the forecast itself and the cash flows are sufficient to actually repay the loan. And that's really, really important. So yes, definitely the financiers want to see the business plan and the forecasting, but also it's really important as a future business owner that you have a good business plan in place so that you are aware where your business is at and what you need to be doing to actually generate the returns and outcomes that you're seeking.
I can imagine that it's important to work with an accountant who has a good track record in this area when you are trying to get the money to buy a business.
Yes, absolutely. A really good accountant that has a strong background in that industry or in the business finance space. You definitely want to have a good accountant in your back pocket, and one that will be able to engage with your other key advisors in the purchase. So the solicitor, the vendor's accountant, the vendor potentially, as well as your finance representative, so be it a broker or a banker.
So what are your options when it comes to getting finance for a business? Are there sort of bank and non-bank choices?
Yeah, absolutely. So depending on what the actual transaction looks like itself, and the purchases, the prospective purchases of that business and their situation, it will sort of create that journey as to whether a major bank is appropriate or whether an alternative lender is more suitable for that scenario. There is quite a range of lenders that are suitable for every scenario. And typically you can work to a solution for all scenarios. It's just really a matter of whether or not major bank is the most appropriate option, and major bank is willing to actually bank the deal.
How important is working with a specialist financier in that process to decide to help you go with the right option?
Yeah, certainly really, really important. I mean, as I said earlier, business finance is, there's so many more shades of grey than a simple home loan. And really working with a finance professional that understands business finance ultimately means that you're in a situation where you're moving forward with the right financial institutions from the word go, as opposed to potentially going to your existing bank who's not a clear business home lender. And with that in mind, you're not going to be wasting time going down a route that is not going to get you the result in the end, and then potentially having to start again and losing time on that whole business process.
Presumably a deal could fall over if that's not handled properly.
Yeah, absolutely. I've seen those situations before, and then having to sort of work with that client after they've had that experience elsewhere, and then sort of spending that time with them, taking that time to go through the analysis and understand their circumstances in the business they're looking to purchase, and then re-engaging. And so where they've had to had that experience and they've engaged others prior, they've lost all that time. Whereas if they had have specifically then come to a finance professional that understood their scenario from the get-go, that time wouldn't have been wasted.
So I understand that these loans are also structured differently to your normal home loan. They're normally much shorter, aren't they?
Yes, absolutely. There's a number of things that are considered in terms of what business loan term is provided. One, the actual underlying security that's being offered for the loan. That's really important. But other things like, if it's a franchise that's being purchased, what the franchise term is, i.e. your ability to be able to operate that franchise for a set period of time, and also the location of the business that you're purchasing, the lease that's on it. And ultimately what the bank is, or the financier is really thinking there is that if we provide a loan term that's in excess of the franchise agreement or the lease, the potential there for a scenario where it's not extended and then there's an outstanding loan with no business to be able to repay it back. So those things all come into play with regards to the loan term that's actually finalised by the bank. The other area really is that, generally speaking, in business finance, the shorter the loan term, the cheaper the interest rate will be due to cost of funds, and renegotiating terms after maturity is generally a better way to go as well.
So Nathan, we're coming to the end of our time together today, but before we go, I'd like you to share with the audience your top tip when it comes to getting finance for a business across the line.
Yeah, absolutely. So as I said earlier, having worked both as a proprietary banker and then also on this side as a broker, there is an immense benefit to you in purchasing a business, knowing that you need finance, to engaging a good finance broker that has good experience in business finance across a broad range of industries. That will ultimately save you a lot of time navigating the significant amount of lenders out there and finding the one that's most appropriate for your circumstances at the cheapest rate.
That's exactly right. That will have a bottom line impact over time.
Yeah, absolutely. Cost of interest rates at the moment, really cheap, but being able to navigate and make sure that you're placed with a lender that's going to support you long term is ultimately going to be really valuable for you in your business. So
it's excellent advice. So thank you so much for your time this morning, Nathan. That's all we have time for today, but we love to hear from the audience. All our contact details are in the details for the podcast, so please get in touch with any comments or feedback. Thanks so much, Nathan.
Thank you.